Hey traders, Raghee here. This is the week of September 22, the trade alert recap for swing trades. So if you want to check out my day trades on the days that we have day trades in the Sector Secrets Mastery, you can find that at my YouTube channel, which is at Raghee Horner. And you'll see there's a section for the how to day trade the first hour of the morning. So you can check those out. But this is swing trade. So what's a swing? A trade that I'm usually setting up on the 1 hour or the daily time frame for overnight hold. So I'm taking these for multiple days to sometimes weeks in terms of the hold time. So yeah, I'm looking for a whole lot more follow through. Now you'll see here there are a number of open swing trades. So these are trades that we've entered and you'll notice scaled out of, and then the closed swing trades, which are the ones that are now no longer open. Notice that I'm also looking at not just a T1, which is a first target, but a T2 and eventually a T3. And so when I look at any trade, I think about what's the possibility and are there levels where I could scale out up to 3 times while tightening the stop in case the trade or the trend starts to pull back beyond what I want to give back to the market, right? Okay, so that's what we did this week. So let's get into some of these examples and we'll walk through these trades together. Let me talk about first, one thing I find far too few traders talk about are losses. And, the only traders that don't like to talk about losses are the ones that probably have too many. I had 3 of them this week on the same day. We opened these up on Friday. This would have been OpEx Friday, September 19, and by Tuesday, they just weren't following through. So the first loss, let's talk about losses. Love the topic. Because if we don't become great losers, right? If we can't lose well, there's no way we're ever going to grow an account. In fact, what I tell my traders in the mastery is the first step to account growth is a stop loss. So lose well and prosper is the thinking. All right. So AA, this is Alcoa. Metals and mining have been a really good sector. And this was an outperformer. It just couldn't keep up after the OpEx entry where we were looking at support at a high open interest level and a support level coinciding on that OpEx. And I bought the 30 call. I bought them for $3.40. So what's probably most important about this trade is when I got in, what I paid, and when finally I lost a sufficient percentage of the premium, I closed the trade. And that usually is 25%. So I'm going to risk 25 cents on the dollar. And at that point, it lost enough. It lost the trend. And while I'm still generally bullish on the trade, in terms of getting in again, I would be in another bullish trade. I want to show you all something because I chose this one on purpose. Most traders will add and add and add and then hope that eventually it moves higher. But what if it doesn't, right? How much of your account in terms of a percentage or dollar amount are you willing to potentially have to close out at? Now, this is especially important with options. It's probably not as vital with shares. Shares don't expire. Shares don't depreciate. Options do. There is going to be a date where the time decay starts sending the premium lower and simply price action moving against the option is going to move prices lower. And then ultimately when we run out of time, that could be a significant loss. So in this case, you might say, well, Rog, would there have been anything else you could have done? Right? Well, yes. Once I got stopped out, I was looking for a secondary entry, and that would have been if price action got down to about 30.60. We never got there. So there was just no reason to hang on to this particular trade. But I wanted to show you this because this is where a lot of traders get into trouble. They say, oh my gosh, Rog, look, we got stopped out and it moved in our favor. Not really. We got in about here and it's trading here. Think about this as well. And oh gosh, when I get on the topic of losses, I really love to deep dive them. This is a decent amount of capital, in terms of the price improvement now, but think about how much capital it's also locking up in terms of buying power. I'm not Berkshire Hathaway with $2 billion sitting on the sidelines. I have plenty of money in my account, but the more dollars I'm spending on things that aren't recovering, right, the less dollars I have to focus on things that could. right? And I think there's a really good example to be made here. A lot of folks asked me about Amazon last week. And I said, heck no, I'm not going to buy Amazon. So imagine if someone bought, say here, oops. Oh, well, let's buy it again. Oops, right? And look how far the premium has fallen. This is why we never want to add. Could it eventually bounce? Sure. But how much of your capital is at risk when you keep, quote unquote, adding to a loser, right? So I just want to show an example. Let's talk about another loss. And by the way, so that Alcoa was in at 340, out at 250. I lost 90 cents, all right? So $90 per contract. All right, on the topic of losers, let's keep going. Let's talk about telephone. This is AT&T. Here's another great example where I am glad to have gotten out with a paper cut. So in this case, I bought at $1.30, went against me, lost my 25%, closed it at 95 cents. Now, after that, it made a lower low, and it's still very, very heavy. This option is worth a whole lot less than 90 cents right now. In fact, this was the October 17, 28 call. These things are trading for 65 cents right now. So please remember, when a trade isn't doing what you want it to do, it's okay to get out. Okay, so now I've spent about 6.5 minutes talking about losses. Well, I don't mind to talk about losses. Let's bring this week up. All right, so I cleared up some capital, both mental and literal. Closed at T. You can see I closed at O'Reilly as well. Same story. And I closed at Alcoa. This was all by, I believe, Tuesday. Well, I also had this IWM trade open at the same time. Bought it for $3.35. Finally closed it for $6.85. Our scale out at T2 was $7.70. This was a 200% return at the T2. Protected some downside, closed it at $6.85. I don't want to give up all my unrealized profit. So realize that if I'm losing here, 35 cents, if I'm losing, on T, I lost about, 235 to 170. It's hard to see through the lines. There we go. I lost 75 cents here. I lost 90 cents there. Do you think I mind when I'm really able to ride out those winners? This one trade alone closed out, swallowed up all of these losses, and I still ended up ahead. And those were my only 3 losses for the week. Well, let's talk about these other 5 trades up here. And again, I find so many traders just talk about winners. And if we don't get the losers out of the way, we can't grow the account. And I hope that's what you're getting out of this video. And again, if you want to check out more videos like this, check out my YouTube channel. All right, so we have Barrick, we have uranium, gold miners. We got into gold miners in a second trade, separate from this first one. You'll notice this was a 68 call. This is the 72. And then we bought gold itself. These are still open. So as I start out this coming week, these are 5 open swing trades. But here's what's really cool. And if you want to pause the video and just kind of do some math so you can see, hey, Rag, this week I can see you have 5 open trades, 6 winners, and 3 losses. If that's every week, I'm a happy trader. So if you want to pause the video and go, okay, Rag, you went from 175 to 515. You went from 230 to 735. I hope you're seeing why we love to cut those losses. Here, GDX, and then you can see what we did with gold. So again, you can crunch the numbers. I like to be really transparent with my traders, and we send out recaps just like this out to the Sector Secrets Mastery members every day. All right, so let me talk about one of the trades that we have on right now. I'll talk about 2 different ones because I have a pretty deep position in gold, whether it's gold itself, gold miners, or Barrick, which is weighted within gold miners. This is uranium. And what we did with uranium, let me show you here again on the list. We bought these options. These are the October 17 44 calls for $2.30, and currently they're at $7.35. Which is a pullback from the high that it was at. So what I'm usually looking to do with our members is wait for a day that we get a dip, any kind of move lower into the daily price movement range. And there's been numerous opportunities to do this in uranium, which, by the way, is very much tethered to the nuclear narrative and has names like Camco, NuScale, Oklo, in terms of general exposure. Take a look at the move higher. This is, again, where we buy these things as inexpensively as we can. We're risking usually about 25% premium. And then now this trade is sitting at about $7 and change. All right, let's take a look at another one. This is gold miners. And you can see on gold miners, the trade was two different trades. Now, this is not adding to a trade. One day we had the GDX set up, and later the same week we had a second GDX set up. And the reason they're two different strikes is because GDX has gone higher. If you take a look, let's keep this on the screen here. If you take a look at what's happening with GDX, we had pulled back at one point in this area. This is where we bought the 68 calls. I want to buy at the money calls. So if you're wondering, okay, Rog, what are you buying? I'm buying at the money calls on a dip. All right, we had another opportunity, and this was to buy the 72 calls. You can see here, we bought the 72 calls on a dip. So they're two separate trades with two separate targets and two separate costs, right? And this one's obviously the more mature trade, the 68 call, and it's obviously gained a lot more. This is a newer trade. We've already hit the first targets. We bought this at 3 different scale-in levels. So when I send out an alert to our traders in the Sector Secrets Mastery, I give them an aggressive trigger, a moderate trigger, and a conservative trigger, all at the same time. It's all in the same alert. We don't add later on as a trade goes against us. That's just silly, right? So we have a set number of dollars that we're risking. We have a set percentage risk to the account, because if we add beyond our budget, now we're increasing the risk to the account, which is one of the many reasons adding is such a bad idea. So in terms of overall movement, at the money, on the dip, and then at this point, this is what I really wanted to emphasize before we wrap up the video. Having bought here, T1, for a lot of traders, T1, they want some sort of stratospheric return, right? 100% or whatever it is. My T1s are really, call it cautious or quite prudent, because T1 is really, frankly, the first step of risk management. When can I stop risking my dollars and risk house money or unrealized profit? And T1 is where I make that adjustment. So while I'm not, over the moon about 90 cents or $1.25 per contract on the first scale out, I'm going to scale out up to 3 times. And I know that if we continue higher, I'm not saying this is always the case, but very often T2 is close to 100%, if not more, in terms of return. So I don't mind having a 100% target, but it's never going to be T1, because I want to get my capital, my dollars out of harm's way, and then just risk unrealized profit. So this is what we've done so far this week. Hope this walkthrough was helpful. I do something similar with our day trades on the mornings that we have trades that trigger. So feel free to check those out. If you have any questions, if you have any comments, feel free to leave them below. I read them all and I answer them myself. So if you do have a question, feel free to ask.